Regarding the details on the Peloton IPO, not a surprise to get this.
Oh, yeah.
But an important company and probably a very well followed or closely followed IPO to come.
Definitely. They had filed confidentially back in June, but now, of course, we know, what the contents of that 200-page prospectus is, and investors are already starting to assess the fitness of Peloton as a public company. Top line growth doubling in the year through June, although losses quadrupled over that same period. Digging deeper into the financials, though, Peloton makes the bulk of its revenue from selling fitness products. They don't break out how much comes from the bike versus the treadmill, other than to say, quote, a significant majority comes from the bike. The treadmill was launched just last year, though. About 1/5 of Peloton's revenue comes from selling $39 a month subscriptions that allow users to tap into their live or on-demand workout classes from home. Peloton says they have about half a million subscribers with triple the number of members. These key metrics will all be considered by investors as they model out a price that they're willing to pay for Peloton shares in a debut that could come as soon as next month. But Peloton's vertical integration makes it a little harder to know, right now at least, what kind of multiple it could achieve. They say on page 3 of their prospectus that they're a technology, media, software, product experience, fitness, design, retail, apparel, and logistics company. CEO John Foley says in a letter in the prospectus that the decision to be a company that does all of those things was, quote, against prevailing conventional wisdom, met by countless investor conference rooms full of very smart skeptics. Its private investors no longer appear too skeptical. Peloton was valued at $4 billion and is reportedly seeking twice that valuation in the IPO. Now, it's worth noting, guys, Comcast, the parent company of CNBC, is an investor in Peloton.
People, I would think, Leslie, are more likely to value at a higher multiple a subscription model than one that is selling expensive bicycles.
Certainly.
It's only 20% right now, but I would assume that they are going to make the case that it will become a larger and larger percentage of their revenues, and obviously the recurring nature of that is something you may be willing to pay a higher multiple for.
Certainly. And obviously it makes sense that once you buy the product, then you will buy the subscription service on top of that product. One thing I did find really interesting, though, is that gross margins for both the products as well as the services, the subscription, were almost equivalent, about 43% for each of those in 2019. Now, that's changed over time. It's gone up for the product, for the subscription. But I was surprised to see that they were pretty equivalent. I think a lot of that does have to do with this idea that the company is vertically integrated and then that they do kind of control the entire end-to-end experience, and so they don't have to outsource, manufacturing of the product or marketing of the product or delivery of the product or anything like that.
One risk factor I thought was interesting, because it relates to our conversations every day, was that they're exposed to tariffs.
Yeah.
That they have been hurt by the tariffs already in place. U.S. rates on specified products from China, see that as a risk that it could continue and have a material impact on gross margins. Are the bikes fully made in China?
It's the components in the bikes that are made in China, and that is what is subject to tariff, at least according to their prospectus. So it is interesting, too, especially you mentioned the timing and what we've seen over the last few weeks with the volatility and how the market does seem to react and punish certain stocks that are more exposed to the tariffs and reward stocks that aren't as exposed to the tariffs, given kind of the nature of the tweets and the news cycle and all of that. It is interesting that Peloton, given their manufacturing in China, and that they do have some exposure to debut in this environment.
I wonder if the bulls are going to invoke Roku as you have a device, it's playing a big trend, but really it's a Trojan horse for a subscription service, and we're going to be a content provider thereafter.
Yeah, that is an interesting question as to what the exact comps will be when this company goes public, because you could invoke a Roku. They do have the hardware, they do have the software component, which you don't see quite as frequently. But then Peloton on top of that has this whole, fitness component to it. They also create their own content, which is a whole, different ballgame in terms of how you would value and assess a company. So it's pretty interesting. It's also worth noting that the CEO, John Foley, in his letter talks all about endorphins, and endorphins make people happy, kind of like the quote from Legally Blonde.
Yeah.
Very much.
I know, yeah.
Did
No
he
secret.
quote it?
Exercise makes us feel good. It's simple science. Yeah.
He just hoped you got it, I think.
Yeah, he did not credit Legally Blonde in that letter. But for those, who have memorized that movie, they may have,
like all of us,
picked up on that line. Exactly.
It's pretty good.